give us the state of the practicing of the dark art of the Fed, given this original moment in American history.
Well, thank you, Tom. And as Alan and we all, and I've certainly believed there's as much or probably much more art than science in monetary policy, but it's good to refer to some of that as well. I think that the Federal Reserve in August adopted a new framework. It's an evolution, but it's a robust evolution, and primarily it is outcome based. Our goals are maximum employment and price stability, and we want our policy to be robust if our models break down. And we can still do monetary policy, but we're going to be more outcome-based and less outlook-based. And I think that served us well in the pandemic, and I think it will serve us well in the years ahead.
Could you characterize that as a commitment to being late instead of being early?
Well, what we've said in September of last year, following our framework announcement in August, is that we do not expect to lift off until three conditions are met. First, that inflation actually gets to 2%. We want to see actual inflation for at least a year at 2%, and we want that to be sustained, not just one and done. Secondly, we want to be looking at labor market indicators that are consistent with a fully employed economy. And third, we want that to be sustained. We think that's appropriate since we've hit the effective lower bound. Inflation's been below our target for most of the last 10 years. And under those circumstances, that is a good policy. You are correct that in the past, the Fed was more preemptive. And indeed, my research suggested that if you've got good models, you want to be preemptive. But if the models are not serving you well, you're more robust if you're looking at actual data. So that's the way I characterize it, Josh.
The conversation, as you know, Vice Chair Clarida, right now is over what substantial progress actually is. You're familiar with the debate. We talk about it almost every single day on programs like this. Do you think it's necessary to define what substantial progress actually is?
Well, first of all, it's actual progress. I think that's an important point. It's not projected progress. It's hard numbers on the labor market and on prices. That's the first point. Secondly, we're early on in this year. I know we've already sort of penciled in 6 or 7% growth and a big fall in unemployment. But under outcome-based policy, we really want to see that. As Chair Powell has indicated, and I've indicated, as we go through the year, as the data comes in, as we release our SEP projections based on that incoming data, we will have a sense on where we are relative to that progress. And as Chair Powell has also indicated, as we think we are making that progress, we will communicate that to people who listen to our communication. And so I think that this is really where we want to be. It's actual progress. It's not projected progress. And as we go through the year, we will be informing the public about our views on that progress.